Hello. It's possible we might have one of my colleagues who might join us too, and he will be adding one or two to the topic. Okay, good. He'll be adding one or two to the topic for us to learn. So, as I was saying initially, I said the trading plan is some form of written information you need beside you to keep you going in the trading journey, to keep you going in your trading process. As you have a trading strategy, yes, subconsciously or consciously, we do skip out of the trading strategy. Today, you might decide to be a day trader, someone who takes trade by the day and ends it at the same day. But while you're doing that, in the process of taking those trades, some things happen. We talked about trading psychology the last time, trying to control your emotions, trying to understand that part of you that is taking all over your trading process and how to subdue them so you could do this thing what mechanically. Now, what helps you in doing this mechanically is a trading plan. Why? Because your emotions will kick in, fear will come in, greed will play in, over leverage, over trading, revenge trading will all kick in. But when you have a trading strategy behind you or beside you, it does what? It helps you watch out for those things you need to do step by step. I still remember that I gave out the 5 elements to developing a trading strategy, which I stated them out for you. Now, if you are to work on a trading plan, you will need to define those things specifically. You need to define them specifically. So as I have on the screen, I said a trading plan for Forex is a document that outlines the strategy, goals, and tactics a trader will use to execute their Forex trades. A trading plan can work for anything at all. It mustn't be Forex alone. You could use it for commodity, you could use it for metals, you could use it for index, you could use it for futures, anything at all. It typically includes information on the trader's risk management strategy, position sizing, stop loss, and take profit levels. A trading plan helps a trader to stay disciplined and focused. A trading plan helps a trader to stay disciplined and focused, making it easier to identify and capitalize on profitable trading opportunities. If you understand what I have just said, when you have a trading plan outlaid or you have a trading plan outline, you can't, let's say you want to take a pound USD trade, GBP USD trade, and you have on your trading strategy, or you have your trading strategy to be at every point of support resistance. At every support and resistance, I want to only trade the shooting star when I see them. I only trade the shooting star when I see them. Now, when you see an engulfing candle, you have that outlined already in your trading plan. When you see an engulfing candle, you won't take it. Why? Because you have tested your strategy. You had back tested it over time, and you got to you identified the shooting star as that candle that gives you what? That gives you good risk reward, that gives you good profitability. You've not done that with the engulfing candle before. You've not done that with any other star before. What you get to understand is this: once you get that part identified, you will not go against what you have outlined. Why? Because it is a reminder of your trading activity, bringing you towards repetition on a daily basis. Bringing you towards repetition on a daily basis. What the trading plan helps you do is this: it keeps you in line to repeat what you did yesterday that gave you profit. So you can do it today and have same profit. Yes, it is not 100% guaranteed that you can make profit every day, but at least it keeps you in line to keep on doing that thing over time. You repeat the same process over time. Do you understand this now? Please, if anyone does, if you don't understand Do type in I don't understand in the chat section below before we forge ahead. Okay. So in building this trading plan, some of you might want to say, but I don't have a strategy. Yes. Some will say, yes, I have a strategy, but I'm not a master of my strategy. Now, these are the things you need to do first before writing out a trading plan. These are the few things you need to do before bringing up a trading plan. You will need, okay, let me even go ahead and state this, that you can't be profitable in the market if you don't have a trading strategy. You can't be profitable. I know most of you have seen, you've seen trades on the internet, bogus results on the internet, on Instagram, on YouTube, on Twitter. You've seen a lot of people trading and you're beginning to wonder. Now, when we check why we have 90% of traders failing in the financial market and just 10 are doing well, it hits back to these things. Trading plan, being disciplined to following your trading plan, being disciplined enough to follow your trading plan. As I said earlier, if you have a strategy that has a 50% win rate, you have a strategy that is 50% win rate, you had backtested it over maybe 10 sample trades, and you discovered, okay, if I take 10 trades, I already know that I'll win 5 and maybe lose 5, or maybe lose 3, break even at 2. Now you already know your win rate to be 50%. All you need to do, and you have maybe a risk reward ratio of 1:3. You have a risk reward ratio of 1:3. So all you need to do is develop your discipline level to the point of following that plan, the plan you have crafted out over time. Because as you go along in the trading journey, it will get to a point where you will not be satisfied or comfortable with what you're making anymore. It gives room for refinement. You'll begin to refine these strategies. You'll begin to work on them to perfect them, bringing them into perfection. Maybe you have your initial trading plan works on a 20 pip stop loss. Over time, you can refine it. When you begin to get good with your strategy, you can refine your stop loss to 10 pips and you have it laid out in your trading plan. You still follow it. So it gives you that avenue to monitor your trades. It gives you the avenue to understand consciously what you are doing. It helps take away those elements of fear. It takes out that element of fear, inject what? Self-consciousness to your trade. So the importance of having a trading plan includes easier trading, as I have explained earlier. It gives you more objective decisions to make. You have your stop loss at a point. Let's say your stop loss is 20 pips. You already say, I'll be taking my trade at, once the trade goes against me, let's say this is an uptrend and this is your stop loss. If it goes against me at this level, I'll take my trade. Some people don't do this. Let me tell you one thing. Some people have their eyes set on, I wouldn't see this as an uptrend. If the market drops to this level, I want to enter and start buying, no problems. But once the market drops further beneath that level where they have in mind, some people are so stubborn, or fear comes into them. They believe even going beneath their stop loss level, that the market should have a reason to go back. Now, it does not give them that objective decision to make. Like, they don't have that power over their decisions. But with a trading plan, it reminds you of this. It reminds you of where you have said your stop loss would be if you are wrong in the market. If you are wrong, okay, take me out at 20 pips. take me out at 20 pips and I'll be good. There's a guy on Twitter I do follow. Maybe later on I'll shout out his handle. I'm not trying to market him anyway, but he's a good trader. He trades gold only, just gold only. And what he has in his trading plan is 150 pips every day. 150 pips every day with a stop loss of 50 pips. With a stop loss of 50 pips. He did something, I think 3 days ago, when the market went against him. I was surprised to see him take off his trade at 50 pips. It was exactly 50 pips and he left and he said he was done for that day. He has a rule of taking one trade every day. Just a trade. Nothing more, nothing less. And he trades only London section. And he trades only London section. So if he misses a trade in London, or let's say he misses a trade in London, he will wait for New York to still keep up with his rule of one trade per day. If that trade goes in a loss, he stops trading for that day. I know many of us here will trade all the whole pairs in the world. You want to trade gold, you want to trade US30, you want to trade GBP USD, you want to trade GBP JPY, you want to trade NZD. Now that is not taking you're not taking that sniper shots at the market. You're not taking that sniper shot at the market. What you're doing is you're scattering things around. In a trading plan, as a trader, you are supposed to be focused. You're supposed to be very objective. When I mean focus, I mean laser focus. Laser focus. Yes, I don't see, if you have the capability to take as much trade as you can, no problems. But it gets you scattered everywhere. If you want to trade a pair, let it be one pair. If you want to trade two pairs, let it be two pairs and remain there. Now, you can decide to trade one pair and not see a strategy on that pair for that day. It still doesn't say the market will not give you an opportunity the next day. It still doesn't say the market will not give you an opportunity next week. What it has helped you do is it has helped you reserve your capital for the next trading opportunity. For the next trading opportunity that would fit into your strategy. That would fit into your strategy. Another thing a trading plan does for you is this. It helps you define your strategy properly. It helps you define your strategy properly. Now, when your strategy works in a trending market, and you already studied it maybe the morning before you want to trade, you've looked at it, you've gone through it, remind yourself of the things you need, the steps you need to take. When you open your chart and you're not seeing a trending market, you will leave. You will leave and not force anything because you already know that, okay, this strategy only works in the trending market. It works only in a trending environment. If I leave to trade in a range environment, I don't have the tools to handle it. I don't have that knowledge in my head or in my brain to attack a range market. But we all want to trade every day because we don't have something that is keeping us or putting us in check. We don't have that document that we want to stay by it and remain with it to get to that level of profitability. Now, talking about the importance of trading plan, it makes you what? A better trader. It keeps your trading discipline better. Like, I wish you understand what I'm talking about in this trading plan. You see this element of trading, this part we call, this part, let me see if I can find my highlighter. No, not here. This part we call, okay, this part here. In trading, you need to be very, very disciplined. You need to be very, very disciplined in all trading environments. You're in profit, you need to be disciplined. You're in loss, you need to be disciplined. Because this is the only element elements and habits that will make you profitable. This thing, this word discipline, yeah, especially this one, you need to be disciplined. Staying in point at all costs. Staying in point at all costs. Like you're not deviating from what you've learned, you're not leaving what you've learned, what you've understood, what you see as working. We might all have different trading strategies here as individuals. You have seen something that works with you, fine. You have practiced, you have crafted a working strategy that works with your personality. Now, you wouldn't expect someone from somewhere to come tell you this is going to work. Say you're looking at pound USD somewhere, pound USD on your chart, and you're seeing another person telling you you're seeing a buy. Another trader is seeing a sell. And the person is trying to enforce that sell on you. But while you're looking at that, pound USD still on your chart, you are not seeing the sell opportunity. All you're seeing is still a buy. Now, as a trader who is disciplined and following his or her trading plan, because your trading plan has given you this, while following your trading plan, your strategy has arrived at the conclusion that pound USD is going to buy. Because of your trading discipline, you want to stick to this. You want to stick to your buy. Even when the market will start and you see the sell, and the market ends up selling. But because you had worked with your trading plan, you had worked with your analysis, your strategy, and you arrive at the buy, you stick to it. Yes, what you might have lost will be that same thing you have projected. Like you have decided to make 20 pips your stop loss. It will still be the same risk level, the same risk management. And that doesn't say the market shouldn't give you an opportunity to trade tomorrow. Now, that same person who has given you a sell might not see the buy that will come up tomorrow. Maybe his own strategy too has deviated from that. And what he is saying is a buy. If you tell that person the market is going to buy, he might not believe you as well. Why? Because he or she is sticking to a trading discipline. But some other persons, when you tell them the market is buying now, they stick to buy. The next minute you say it's going to sell, they still follow you for a sell. Now they believe as an expert, that is if you're an expert trader and they know you're an expert trader, it's a different case entirely. But for someone who is just starting up and you don't know how profitable that person is, or you can't vouch for their winning rates, it's quite difficult to just go with their calls, their call calls, their trade calls. It's quite a bit difficult to go along with that. It helps you create more room for improvement. Like I said earlier, you have a trading plan. Yes, you're just starting out. Some of you are just starting out. You all have trading plans you want to, you all have trading plans, you have strategies you're working with. Along the line, you will create, you put in adjustments to your strategies. And while you're putting in adjustment to those strategies, you're having them stated out in your trading plan. You have them stated out in your trading plan. Maybe initially, like as I said earlier, you were using the shooting star. Later on, during your back testing during the weekend, and you discover the engulfing also gives a good risk reward. You might decide to include it. Okay, if I don't see a shooting star around my support resistance area, and I see an engulfing candle, I'll trade the engulfing candle. What it does, that it takes up that impulsive trading, that whenever you see a shooting star, I'll act. Whenever I see an engulfing candle, I'll act, giving you more options of trading on a daily basis. Some of you might just be waiting for an engulfing candle and you don't see that engulfing candle. Say you have only engulfing candle on your trading plan as your trading entry or trading signal, trading setup. And you find only shooting star, just because you have just engulfing and you have just a shooting star, you wouldn't trade. And at the end of the trade, that trade might go in profit, huge profit, and all you do is come and lament, I missed this trade, I missed this opportunity, I should have done this. Psychologically, that thing is going to work on you. Why? If you're the type who is not ready to create that room for adjustment or flexibility, it will make you want to go back and start looking at your strategy again you begin asking questions. Are this thing working or not working? Is it me or the strategy? Is it this? Yes, it will give you room for research and experiments to work with, but you need to now open up to that part where you need to say, okay, I think I need to work on what has happened during the week. I saw this thing happening. I didn't take this trade. Why didn't I take it? You go back to the drawing board, find a means around it, get your answer, include it in your trading plan while you backtest it and see the results. So if you see this is working, you want to stick to it, creating more room for what? Improvement, for more improvement to come later, creating more room for more improvement to come later. Now, if you want to ask me, you'll be like, okay, we all understand this. We need a trading plan. We need a trading guide. Then how do we create a trading plan? What are the things needed? Now, the component of a trading plan, if you might ask, include anything you find useful, anything you find useful that will make you successful. We'll all have different trading plans because some plans are personal, based on your strategy, based on your attitude. They're just personal and they're different. And we have the general trading plan as well, but it becomes difficult for me to create a trading plan for myself that you would want to follow. It becomes difficult for me, for you to create a trading plan that I would want to follow, because your trading plan revolves around your strategy, it revolves around your risk level, it revolves around your commitment to time, it revolves around your personal risk management systems, your strategies, and your system of journaling. So the components here I have listed are what? Your motivation for trading. Why are you trading? Why do you want to be a trader? That you have to state it out. Why do you want to be a trader? What is motivating you to trade? You need to state that out. Why? Because these are things you keep up as a reminder on a daily basis. You need to keep seeing them. You need to keep checking them every day. Before trade and after trade, before trade and after trade, before trade and after trade, maybe before your analysis in the morning, after doing your trading rituals and all of that. You say your prayers, you meditate, you come up to your trading decks. Before you open a chart, you are supposed to go through your trading plan. Let it give you a reminder. This is the reason why I am trading. This is why I want to become this. This is what I want to do with this. Now, your time commitments. Some of us are too busy to see the whole day to trade. Some of us have we have the luxury of time. We can work from now till tomorrow, just sitting and trading all day. It all works with you. If you're that kind of person, make it, let it be included. Some people trade for 24 hours. There's a trader, I don't know, some of you might have heard of him, trade with Kenneth. Kenneth trades for 24 good hours. He trades 24 hours. Yeah, with his time rate, and he's a good trader as well. I think 3 days ago, yes, that was 3 days ago, on his feed on Twitter, he made $100,000 in 2 days. No, in 2 days, he made 200,000. He was making $100,000 each day. And he's a Nigerian like you. He makes $100,000 each day, but he has been trading for so long. He has been a trader for 7 good years now. You understand? So the time commitment, and how does he trade? He trades 24 hours. Like if he starts in the morning, he trades London, he trades New York, Asia. Trades London, trades New York, Asia. He was even the one who made me understand that gold has a particular time. Gold opens in the morning, at night, and a particular time the gold market ends at night. I never even observed it. I didn't notice such happen. He was the one who told me that. I was like, oh, so this is when I think gold is the same as the others. You understand? So your time commitment to the market is another thing. How much can you devote? How much time can you devote to trading in the market on a daily basis? Are you the type who is a swing trader? You only have 3-4 times or maybe you can trade the market just 2 times in a week. So that has made you become a swing trader who only seeks opportunity in few minutes, and you take them, allow the trade to run for 1 week, 1 month, 2 months. All of that you need to define, state them clearly, be specific. What are your trading goals? What do you want to achieve with trading? What do you want to do with trading? Make $1 million in a year, $2 million in a year. You want to buy a Lamborghini, you want to buy a house. Is it financial freedom that's your own? What is your trading goals? Have them stated out. Now, your attitude to risk. Your attitude to risk, which is another factor you need to understand. Now, this attitude to risk involves your attitude to risk involves how much you're willing. Sorry, your attitude to risk involves how much you are willing to risk per trade. How much are you willing to risk per trade? At what level, or at what level in pips? At what level in pips will I say I am wrong? I say I am wrong, or my analysis is flawed, or my analysis is flawed. Is it 10 pips, 20 pips, 30 pips, 40 pips? It all depends on you and what you have backtested by your strategy. All depends on you and what you have backtested by your strategy. Attitude to risk. How much can I risk? Like I already said that. How much can I accept, or how much can I take as a trader? You have $100,000 account. Let me do $1,000. You have $1,000 account. In this $1,000 account, within you, are you comfortable risking $100 per trade? All of this you need to define. Okay, I'm not good risking $100 per trade. I want to make it $20 per trade. You need to really state it out. Now, how many trades can you take in a day? Okay, I want just one trade. One. Some people will say two. Some people will say, I want to trade the 3 sections. Now, per section, maybe per section, you are taking 1 trade per day, per section. You're risking 20. That means in a day, you'll be risking $60. You're open to risking $60. Are you comfortable risking $60 if you're risking $20 per trade? You need to define this. You need to understand this. It has to be stated, like you're specific. You're hitting the nail on the head. This is how much I want to risk per trade. This is how much I am willing to let go if the market says I am wrong per trade. What does this help you do? Now, on an example of $1,000 per trade, it will help you carve out a time for longevity in the market. For longevity in the market. Out of the abundance you have decided to sacrifice, you've decided to invest in the Forex market with $1,000. Now, it will be a crime, or it will not be proper for you to let go of $1,000 just like that. After having that ambition, or after having that goal, having the goal of transforming your $100,000, your goal of making $100,000 out of your $1,000 in 6 months. Now, because of greed, because of fear, which are the major elements, because of FOMO, you have a trading plan, or you have a trading plan and you are not following it. it is just so certain that you will lose that money. You end up blowing that account. It is just so certain that you end up blowing the account because you don't have a way of even monitoring what you're doing. You don't have a way of monitoring. You don't have a way of controlling your risk appetite. You have nothing. You're not accountable to anything. Let me tell you one thing some people do. Even after having a trading plan, they still go on to have trading bodies. What I mean by trading bodies, people they sit together and trade along with. They sit down together, serious trading bodies, not play trading bodies, like serious trading bodies. They still go out, sit down together and have trading bodies in which they share trade ideas. They share trade ideas. They share everything about their trading purposes. Do you understand? So imagine where you are with somebody whom you've told that all you want to do is risk $10 per trade. And your risk level is maybe 1:3. You want to be doing $10 for $30. And after trading for that day, you silently take a trade in which you lost that trade. Let's assume you lost that trade. And you didn't tell that person that you took a $10 trade. You took, sorry, instead of $10, you took $30. The person didn't know. Maybe the next day when you'll be reviewing your trades and you need to tell this person what you did the previous day. It won't be right for you to now say you took a $10 trade. And after he discovers you took a $30 loss on the account. So it's another form of checkmating you. The trading plan, the trading body can go work together. If you love the idea, it can work together just to keep you disciplined. To keep you disciplined, to keep you in check. Do you know that when you have a trading plan, you might not be perfect with strategy yet, but you understand those elements of trading I told you, the element of a trading strategy that I told you. You have your bias, you understand how to get your direction, you already understand how to get your support and resistance level, you already understand where to enter the market from, you already have a candlestick pattern you're studying, chart patterns you're already studying to enter, you already know where to exit. Like you have them, they might not be refined. They might not be perfect because no trading strategy is perfect. They might not be perfect, but you already have them. You cannot put them into that trading plan, write them out, state them. What time frames do you want to be making use of? What type of trader? It starts with the type of trader you are. What type of trader do you want to be? Do you want to be a day trader? Do you want to be a swing trader? Do you want to be a positional trader? So it starts with these three elements, these three, knowing who you want to be. Okay, do you a scalper? Scalper. So your ability to define who you want to be, the kind of trader you want to be, will bring up the idea for your trading strategy. And your trading strategy consists of the time frames you would be working on, which on these time frames, you will involve the elements of your trading strategy. You will involve the element of a trading strategy. And what do you want to do with that? You stick to them. You stick to them. So let's assume you're a scalper. You decided to be this kind of person that you enter 2-3 minutes, you're out of the market. 1 hour max, you're out of the market. All you need is short move, take profit, you're out. Short move, take profit, you're out. Short move, take profit, you're out. And you already have it that, okay, my time frames for trading as a scalper is the 1 hour, 15 minutes, and the 5 minutes. That is for those who will be doing multi-time frame analysis. Multi-time frame analysis and the 1 hour. This is the kind of trader you are. Now you're saying, okay, on the 1 hour, I'm giving an example of trading strategy for scalper. Say, okay, on the 1 hour, this is where I'll be taking my directional bias. This is where I'll be taking my directional, my market direction. If the market is buying on 1 hour, I'll go to the 15 minutes time frame and find my support and resistance on the 15 minutes time frame. I'll wait for a candlestick pattern on 15 minutes time frame to form that is in the direction of the trend of the market direction in 1 hour. I'll go to the 5 minutes to enter from the 5 minutes when I see a pattern. So it is just, I'm just giving you an example. Before you enter, that is a strategy. You go down to your risk management again, there will be a part for risk management. In that part of risk management, you're telling yourself, my entry, I will risk 2% of my account. I will risk $10 of my account to enter a trade that fits my strategy. I will exit. Now for your exit and for your exit exit plan, I will exit at 1 to 3. Or if the market hits my stop loss. Another thing some of us do as newbies, which me, I've done it countless times before. A market is going, let's say you take a trade, you took this trade. It's in your direction. Now, suddenly the market started coming back. This is where you enter. And your stop loss is here. This one, I know most of you are doing this very well. This is what I was saying now. Most of you are doing it very, very well. And the market is coming down to your entry level. It's about getting to your entry level. You get skeptical. What if this market comes here now and takes me out? I will lose when I'm in profit. I'm already seeing profit here. What if it comes down to my entry? Will it still go back? So many what if is running through your mind. So many what if is running through your mind and you don't know what to do. That's because what you are not following this, or you don't have it specified, or you don't have it at all. You don't have a trading plan at all. Now, it is one thing to write in your trading plan that my exit and entry, my exit plans is this. It's either the market takes me to my take profit, which I have stated here as 1 to 3, or it takes me out at my stop loss. I don't know what it does in between. If the market goes, come back, I don't care. And sometimes the market is so funny that it will do these things. You have your TP here. It won't hit your TPO. You have your entry here and you have your stop loss here. It will drive back as if it's going to hit your, come back to your stop loss. It might even get to your entry, below your entry, and go back to hit your stop loss. Some of you would have closed your trade here. Then when you come back the next time and you see it go hit your stop loss, you will now be blaming you. Who do you want to blame, the market or yourself? And you'll be like, oh, what have I done? I should have left this thing now. It nearly came this. That is why you need it specified in your trading plan. What exit plan do you have? What are your exit plan? Do you want it to hit? Do you want your stop loss as your exits? Your take profit at exit. Some people do trailing stop. Some people do trading stop. Okay, let's say you entered here. The market came down and you entered. This is what you're targeting. Some people will do 10 pips. At every 10 pips, I'll move my entry, my stop loss to break even. At every 10 pips, I'll move. If it comes back to hit them, they are good with it because that's their trading plan. They back tested and they feel that currency pair works like that. And they are good with it. Some people will tell you until it touches my stop loss, my entry, my profit level, I am not moving my stop loss. That boils down to trade management, which is also a component of a trading plan. How do you want to, I think I don't have it written here. It's not here. Okay, it's not here. How do you want to, how to manage your trades while you are in profits or in loss? How to minimize time. At times, for those who are in the signal group, you will see where a call will come in, maybe a trade signal was given and it's already in profit. A call will come in for you to move your stop loss to break even. Move your stop loss to break even. The reason for that, that is trade management. The reason for that is to minimize your loss should in case the market comes back to your break even and it wants to go against your direction. So instead of you losing on that trade, you would what? You will break even. That break even is meant for you to recover what you have paid your broker, because you pay your broker commissions whether you like it or not. Commissions have been taken in form of spread on STP accounts or in form of already stated commissions in ECN accounts. So commissions are being paid, whether you like it or not. Now, your available capital for trading, it helps you, it reminds you, it reminds you of how much you have in your trading capital and how much you are willing to risk out of that your capital. How much you have in your trading capital and how much you're willing to risk. I know some of you have maybe deposited $100 before and you blew that $100 that day. You blew that $100 that very day. Why? Because you were over leveraging, you were taking more than you can chew. You never knew you were entering higher lot sizes. You never knew the point of calculating lot size. You just typed in something and you entered. The next thing you were seeing minus $50 and you start panicking. So you having a trading plan and studying it every day reminds you of what? The amount you have in your trading capital. How much do you have? How much? One other part of one very important thing, which we'll still talk about, is the journal. We'll talk about journaling, trade journaling. Personal risk management rules, I already said that already. I talked on that. Now, another component is the market you want to trade. This is very important. This is very important. Your trading plan should comprise of the trading. I know, let me give you a typical example. If you know Jeffrey Benson, I'm trying to give you local traders now. Jeffrey Benson. How many of us know Jeffrey Benson? How many of us know Jeffrey Benson? You can type yes in the comment section. If you do, type yes.
You can unmute them.
Okay, yes, good. You can all talk if you, let me see if I can unmute. Okay. Now, Jeffrey Benson is one trader that I like. Why? Because ever since I've known him, he trades only one pair. You can't see Jeffrey Benson trade any other pair, except for recently that someone is beginning to invite him. Okay, I can barely hear you. Can you hear me? Amen. Can you hear me now? Okay. So except for one, except now that someone is beginning to, I think, invite him over to trade US 30, he doesn't do more than one pair. And that pair is pound USD. That's the only thing he trades. Pound USD, and he's a billionaire. Billionaire in his early 20s. And he lives in this part of the world. And he's a billionaire in Naira. And this is the only thing he trades. This is the only pair he trades. He doesn't trade more than that. I have another person I told you about, Kene. Kene trades, I don't know if you've heard of trade with Kene. If you've heard of trade with Kene, Kene trades only Euro JPY. That's his only pair, and he's also a billionaire. Now, what makes these people billionaires with just one pair? I said it earlier, discipline. Discipline. Sticking to just one thing that works. Sticking to one thing that works. Sticking to just one thing that works. The way our brain works in this repeated fashion. If you do one thing repeated countless times, you keep doing that one thing, it will create a routine inside of it, that it will get to that point where you now you start doing those things subconsciously without knowing you will be doing them. It becomes automatic inside you. So you can imagine you have a trading strategy that is well defined, easily laid out, simple as whatever you can call it, very simple and easy for you to remember. And you are applying it on just a pair. Okay, let's say max 2 pairs. You are applying it on just a pair. When that strategy doesn't work, you will be able to easily go back and identify why it didn't work. If it's from you, you would know. If it's the market that is just doing its thing, you would know. Now, see when let's say you're trading pound USD. At the same time, you're analyzing US status. You're doing NZD-JPY. You're doing Aussie CAD. If pound USD is buying, Aussie CAD is selling, JPY is ranging, gold is bullish, and you're all on this. How would you be able to even know what you're doing? How would you know what you're doing here? How would you know if you enter the pump? Let's say yes, you're fortunate you got a good entry. You enter and the market ends in profits. You enter NZD-JPY, ends in profits. You enter gold, gold ends in a loss. You enter Aussie CAD ends in a loss. What would you say you did here that gave you that profit? Or do you think your shooting star, your trading strategy for a shooting star, your entry, sorry, for a shooting star that gave you the profit will be the same shooting star that will evolve here? You might not see a shooting star here. Maybe it's an engulfing. Maybe it's an evening star. The same thing as this one. You saw a shooting star here, you enter. So it boils down to your trading strategy works for a particular market. Stick to that market. When you're faced, let's say you're faced with pound USD as your only pair. An example now, as your only pair. If pound USD is ranging, if it's trending, let's say it's trending bullish, and you already back tested it, you already worked with it, and you found out that it works, your trading strategy works best in the trading environment on this pair. You stick to it. This is one thing the market does. The market trends 70% of the time, ranges 70% of the time and only trends 30% of the time. Which means knowing that your strategy works on a trending market, trending environment, which comes by 30% of the time, you want to make use of this opportunity. Once that trending environment comes, you want to do that. You want to go in and make money. But if you are trading every time, say this is a range market, a trading trending environment, you enter. You see range, you enter. I am very sure that if you make profit here, you give the profit back here. The market will collect the profit back here. Or if you make profit here, the market will collect the profit here. Why? Because when you will be looking at this market, you will be looking at it with the eye of this strategy, which might not work. Which might not work. But if you have just your trending market and you master trending market, when you see a trending market, your brain will be able to recognize the pattern. It will recognize it sharp, sharp. Like sharp, sharp. I've done this before. I've seen it before. So these are the possible outcomes that can possibly come out. And you want to go with that. And you want to, that gives you what? Confidence. It creates confidence. It boosts your psychology in trading. Now you talk of the market you want to trade as well. I just said, then your trading strategies, highly defined, How do you define your market directions? What time frame are you to trade on? What gives you your trading time setups? How do you want to exit the market? What's your confidence? What indicators are you using? What must this indicator do for you to agree with price action? What are your confirmations? Are you using time in confluence with your entries? Are you blending time in confluence with your entries? So all of that, you need to have a clear strategy to put in place. Now, and the last but not the least that I like the most, after having all of this, you have everything here written out, well defined, easily understood. You see this part? This part here. This is where your improvement as a trader starts from. This last one. This is what makes that bit by bit difference. This is what takes you from the amateur trader to becoming a professional. Record keeping. Record keeping is that part where you would want to state the things you do on a daily basis while trading. There are times you wake up in the morning. I don't know if it happens to some of you, but it does happen to me. I wouldn't feel like trading. I wouldn't even feel like opening my charts. At times it just happens that to open the chart becomes a problem. And I know when it happens like that, I'm not in that zone. I'm not in that right frame of mind to trade. If I analyze market is rubbish, I will analyze rubbish. I already know. So I will not even bother. I might later on open the markets, maybe on my phone, to see what it has done against the next day, which one is trending, which one is not moving. But I won't take action. You understand? Why? Because over time, I already seen that part of me that works like that. That part of me that will just wake up lazy and wouldn't want to do anything. That part of me that is not sharp to trade. So for me to now say, let me force myself, today is another trading day, and let me go and trade. You lose money. It will become another pain. That will now grow into another pain that might psychologically affect you the next day. Why? Because all you'll be thinking of is how to recover what you've lost. All you'll be thinking of is how to recover what I lost yesterday. How I need to make more money, the money I lost yesterday. How I need to make the money I didn't make today. So it will bring up that part of pain. Now, that's by the side. Another good thing about journaling is this. It will help you because while you're entering trades, you will need to write why you entered the trade. The reason why you entered that trade, you will need to state it out. Okay, I entered this trade after seeing an engulfing candle at my resistance level of price, that. I'm expecting the market to drive to this level, that. You take a screenshot of your charts. You take a screenshot of your charts, how you got to that analysis, why you took that trade. If it ends up in a profit or in a loss, you have it recorded somewhere in that same book. We call it a trading journal. In that same book, you have it recorded somewhere. Okay, I took this trade, it ended up in a loss. So that when you go back to reviewing them, when you go back to review these things, it will become easy for you to trace what you've done. Now, in tracing what you've done, it might end up telling you that you didn't follow your trading plan, and you'll get to know. You will just figure out what didn't work, what didn't make it work there. Okay, I didn't follow my trading plan. Oh, obviously it was a ranging market, but I saw it like a trend market. Why? Because you were blinded by that pain. of trying to recover your money, psychological errors. You understand? So you see why you need to be, the market is that field where you need to become sharp. Like you need to have this sharp mind. Your mind has to be working. That's one major reason is why you see, if you've noticed something with some of the traders, home and abroad, they don't joke with visiting the gym. They don't joke with exercises, either in the morning or at night. It keeps the mind sharp. It makes your mind sharp. Some wake up in the morning and they do observe this morning ritual of maybe take a run, do a 30-minute run, come back sweaty. Some go to the extent of having to take their bath with cool water in the morning after that run. Do a little bit of meditation just to keep the mind sharp so that when you come into the chart, you feel like wounding the market, like you feel like killing this market. Now, in feeling like killing the market, you don't come in too overconfident. So try to watch that part too. Try to watch that part of you coming in with so much confidence. You need to regulate it, tone it down a bit, tone it down a little, and just come in like you, the ordinary person who has a plan to follow, who has a well-stated plan to follow, and follow the plan judiciously. If it ends you up in profit, good, you keep it for that day. If it doesn't, go back at the end of the day, review that trade. What didn't work out? What worked out? Do you understand? Make a review, check on it. Did it work or it didn't work? If it didn't work, then you know what to do. Find those little pieces of mistakes you've done and create the error. That keeps you in a very good shape. Do you understand? So at this point, I want to know if you understood what I've been saying since. So I shouldn't be the only one talking. If you understand what I've been saying, says yes in the comment section. And if you don't, please air your mind, air your mind, air your mind. We're all here to learn. I'm also learning right now because most of these things too, it took me a while before I could get them right. Okay. We have how many people in the house? We have 9 people in the house. Only 2 are saying yes. What about the others? Are we good? Are we good? Lillian, do you understand what I just said? Okay, okay, because I need to know we're following, but this is a very important section of trading. Very important section. Okay. Now, heading over to the part of how to create a trading plan. We just talked about the component of a trading plan. Heading over to the part of how to create a trading plan, like we all said, you need a motivation. What is motivating you to trade? Do you want to buy a 170 million naira house? Do you want to buy a Lamborghini? Is it Ferrari that is on your mind? Do you want to go to Cape Verde, go and enjoy life? Have this thing. What is motivating you? Do you want to pick up your family from poverty? You want to take them into riches, wealth? Have these things stated out. Because I know if for some of us, if you wake up in the morning and you see these things, you will get angry in your spirit to get so serious. To get serious to that part, you'll be like, you see this thing, oh, I must make it. Nothing will hinder me. Nothing will stop me. And the next thing, you're writing your trading plan. You're working on it. I want to see how I can be making $100 every week. How can I do it? You split that $100 into 3. Okay, I'll be doing $33 every day in 3 to 4 trading days. Okay, I'll be risking $10 to make $30. I think that's achievable. I'll take 2 trades per day. You have it clearly stated and you want to follow them, like follow them clean. So the first thing you do is 1, outline your motivation. What motivates you? What's making you take that decision to become a trader? What are your reasons? State them out. Let it be something you've resolved to solve. Let it be something, an issue. You get it right in trading, is going to get its solution. That thing is going to be resolved. Now decide how much time you can commit to trading. We all said this already. How much time do you want to state it out? State it, like write them. It's not just stating, not some trading plans can take, I think the first trading plan I had took it took 4 pages, 4 pages typed. I went down to a computer center. I have it typed out. It was my first trading plan then. I had it typed out. Now I discovered something, and please don't do this mistake as well. Do not make your trading plan so voluminous. Do not make it something that's so big that at the end of the day, you won't be able to comprehend it. You won't be able to master it. Even in reading it, you might get lazy when studying it because there's nothing to ginger you there. Make it so simple. It could just be a one-page trading plan. Just one-page trading plan. At most, 2 page. Just make it a 2 pages at most. But if it's possible, you can make it a one-page trading plan. Make it a trading plan that within the space of 10, 15 minutes, you have gone through it and you've digested it. You can go over it 2 times and you've digested it. Everything is speaking to you, taking you back to your trading zone, making you energetic and confident enough to take your trades. So define your goals. I already told us that. Then choose a risk reward ratio. What's your risk value? What's your risk appetite? What's your reward appetite? Are you the type that you're seeking for 5 RR? I risk $10 to make a $50. Are you the type who wants to do $10 for $100? State it. And make sure it is something you're not doing it out of greed. Don't do it out of greed. Because when you do it out of greed, it will force you into taking trades. It will force you into taking trades. So what you do is this. Make sure you had back-tested your strategy and you see the kind of risk reward it gives you. If it's a strategy that is comfortably, anytime you take that strategy, you take a trade using that strategy, it gives you a 1 to 3. It gives you a risk reward of 1:3. Stick by 1:3. Work with it. A strategy that gives you 1:2. Stick with 1:2. Just stick with 1:2 and work with it. If a strategy that does 1:10, stick to 1:10 and work with it. Do not deviate from, because some of you will take 1:10 and your strategy maybe is just is good with 1:2. At the end of the day, you want to take more trades just because you have 1 to 10. You want to meet up with what you have in your trading strategy. It will affect you psychologically. It will make you force things and deviate you from your initial goal of how much you want to make from the market or what your goals are. Decide how much capital you have for trading. This is one part you need to really note well. How much do I have? How much do I have in my trading capital, in my trading account right now? Like, how much capital do I have? How am I going to divide this capital to fit in my goals? Okay, I have $100. Out of this $100, I want to see if I can take 100 trades. By merely stating that, you're already saying you are willing to risk $1 per trade. $1 per trade. It now depends on you if you want to do it in 100 days, no problem. If you want to do it in 10 days, still on you. So you're beginning to see the different ways your trading plan can come in. That's why I said trading plan, there's no definite trading plan for everybody. You have to create your own trading plan, something that works with you. Now, access your market knowledge. This is this part where even after your trading plan, if your trading skill is not up to par, I'm sorry, you're just designing a trading plan. You will have to work on your trading skill. You need to get to that part where you are convincingly convinced that I can make at least 10% out of this market. You need to get to that part where you can comfortably say, Mike, I can honestly make 20% in a month out of this market. I have the skill. You can define when the market is trending. You can define when the market is ranging. You understand when there's a range. You already know when there's the market candlestick is working. You already know all of that. Do you understand? So, but the part where you don't part where some of us just have trading plans. This happened to me too. I think 3 or 4 years ago, I already have this idea of trading plan. I already have this big thing around me. This is what I want to achieve. I've done a lot of trading plans too. I designed one trading plan like that. I want to wound the market. Then I was lying to myself regarding this. I really, really lied to myself around here. This part. I knew nothing about the market. Like when I mean I knew nothing. Yes, I knew I had some certain terms. I studied baby pips, understood it, but the application I don't have up to 20% knowledge on application. I struggled with this thing they call market direction. I struggled with it for a very long time. It was later on when I came and I had the assessment, I had to be honest with myself, and I discovered this market direction was my major problem in trading then. It became a major problem. And then I tried as much as I could to find coaches that will teach me how to, because I already know my problem. So I was looking for traders, coaches that would teach me how. The traders I was seeing then were giving me huge bills. Some were billing me 150,000 naira for a section of 2 hours only. One billed me 400K for just 1 month. One billed me 400K for 1 month. And I don't have this money to pay. I went forward. I watched different YouTube videos. This is another thing we need to talk about. Different YouTube videos. I learned a lot of rubbish. And finally got my brain scattered. Now I was looking at the market. Imagine where you will be looking at the market and you're confused. They call it over-analysis. Over-analysis. And it leads to what? Paralysis. It leads to, I was looking at the market and I don't know what to do. Is it buying or is it selling? Is it ranging? That continued for a very long time. Why did that happen? Because I was honest with myself and I needed to find solution. I needed to find how to go about it. I read a lot of books. I read, I think this book by Larry Williams, short-term trading by Larry Williams, the first trader who made the $1 million from the market. I read that book, and that was where I got the idea of market structure. Market structure. Now, the market structure, you know, is not the market structure I'm talking about. For some of you who are studying market structure, the market structure you know now is not the market structure I am talking about. There's another part to market structure. That is why I said I learned a lot of rubbish. So please, learn from this. Assess your market knowledge. That was why I had to break that part of strategy for you into components, into elements, so that you will take your time. You might not have the opportunity for anyone to take you to take you by the hand, to teach you each steps of trading. But over time and experience, what I have stated down, those elements I have stated down for you, take them one by one. Start with market direction. Make sure you are good. When I mean you are good, you can easily see the market and tell this market is going to buy. This is a buy market. You can see a market and tell this is a range market. You can see a market and tell this is a sell market. Make sure you are good with market direction. If you notice you are good with that, go to the next step, support and resistance. Make sure you understand support and resistance very well. In any form you can have your support and resistance, it will come in, because I told you there were different strategies to it. So you might maybe over time come to meet people who would teach you about this premium and discounts, support. They're all the same one, just different names and different concepts. So they call them concepts anyway. Support and resistance. We have demand and supply. Demand and supply levels. And we have Fibonacci levels. Fibonacci levels. I think there are some of that is okay. We have pivot points. Pivot points. I think there are some other things we get. Okay, dynamic support and resistance. Dynamic support and resistance. So you just imagine these components and you want to learn everything. All these concepts. You want to learn all these concepts. I pity you. So what you do is this: pick one, stick to that concept. It's a concept. At the end of everything, at the end of the day, you'll be adding all these pieces together to form your strategy. You'll be adding these pieces together to form your strategy. You understand? So get that part of assessment very well. Assess your market knowledge. What do you know about the market? It is that thing that you know about the market you will now apply. Those things, after backtesting, demo trading, and seeing how much your trading strategy can do. During your course of backtesting, that is where you will now identify your step-by-step process. Step-by-step process to having a working strategy that is peculiar to you. Peculiar to you. Now, there are more than 1 million strategies out there. You can just go somewhere, meet someone, and they'll put you through, teach you something that works with you. I might teach you a strategy that is not good with you. Not because the strategy doesn't work, but because you don't feel attached to it. There's a strategy I am using currently. I learned, let me give you a short story. I learned, what's it called? Support and resistance when I started. I wasn't comfortable with support and resistance. I don't know why, just my inquisitive mind, not because I needed to know what was going on deep down inside the market. I learned indicators. I really don't like indicators. I don't know, just me. I went to demand and supply. I wasn't comfortable with demand and supply. I went into ICT and SMC. So you can see, for someone who have done all of this, at one point in time, I started having what? Confusions around. People don't understand. My brain began to work like, I'll be seeing everything here has support and resistance. I'll be seeing support and resistance. I'll be applying ICT strategy to it. At times, the result will not just come. Hey, what's going on? I'll apply indicator. It won't come. I'll inject supply and demand. So the thing was giving me boost. It was later on, I met someone and the person said, stick to one strategy, stick to one mentor, stick to one system of trading. Do not use any concept you don't understand. Any concept you don't understand, do not use it. Why? Because it will make the market difficult for you to interpret. I think this has taken a lot of time for us, but it's necessary we iron it out. It will take, it needs you to understand. At times, I know some of you are marveled when people analyze the markets, how they say these things, how they look at it, and you'll be like, how does he know this will happen? And maybe eventually the market plays in its direction, in that very thing he said. And you begin to wonder how is that. Yes, he has mastered that thing over time. He has understood how the market works with that strategy. He tells you when there is liquidity, when there is volume, when there is momentum. He didn't just start yesterday. A lot of hard work. So you need to be honest with yourself around that part. State it clearly in your trading plan. If you already have one that is working, then start a trading journal. That is a diary there. Start a trading journal. That will help you monitor your righteousness as a trader in following your trading plan. How disciplined can you be as a trader? How disciplined can you be? How disciplined can you be? Now, we have come to the end of this very class. But first, before we say anything, I would want us to contribute. For those of us who are having issues with this, do you have questions? Do you have you have a strategy, you don't have a trading plan, you don't have a strategy, you don't have a trading plan? I would like us to ask questions. Let's unmute the mic and ask our questions, please. Unmute, 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 and ask questions. Who is ready to go first? Who is ready to go first? Who is ready to go first? No questions for me. Samuel. Samuel, no question. Okay. Divine have a question. All right, go ahead, go ahead. I have Samuel have to, okay. Go ahead with your questions, please. Okay, can you explain the concept of liquidity briefly? I also have, that is strategy. Wow, let's see. Okay, who again? Omoyeni, I'll come to you, Divine. Omoyeni, go ahead. I don't have any strategy. Okay. Who? Samuel Kasim. Samuel, ask your question. No place to unmute. Okay, let me see. I've given you the part to talk now, so you can talk.
Good, sir.
Good evening.
Thank you so much for the class and the good work. Thank you. May God bless you.
Amen. Amen.
The question and what I want to ask is regarding all these strategies and backtesting and all of that, how can
Yes.
one come to a kind of a point of decisions to know this one works for me? Because these things are much, and looking at what we've been given already, as in, doesn't mean you have to try one after the other to know the one working from the beginning. You try this one, you go to the next, and all of that. This is one of it.
You see the issue. I'm just hold on, please. You see the issue of strategy. Like I already said, there are 1,000,001 strategy out there. All you need to do, okay, Divine, I'm coming. All you need to do for you to have a strategy, you don't need to reinvent the wheel. Do you understand? You don't need to reinvent the wheel. find a trader that has a working strategy, because let me cut the journey short. Let me cut one journey short for you as traders, beginner traders. Do not say you want to learn, like you want to start studying. It's good you study. It makes your knowledge go deeper. But try as much as possible, find a mentor. Find someone who is already profitable as a trader, who knows his onions, and let the person teach you. Like, let the person sit with you, sit down with you, teach you. That is the reason why we have our trading community. It's one of the reasons why we have that trading community where analysis are being dropped. It's just so painful that some of us don't participate in the discussion class. We don't take part in that discussion class. That would have helped some of us. If you take part in that discussion class and a trade is being dropped, questions will be asked. I think sooner, by the grace of God, we'll start doing live trading. We'll start doing live trading where you'll be seeing analysis, where analysis will be done. I know the challenge most of us have is timing. We go to work, we don't really have that time to participate, but it's fun. When we sit together, we share what we see, and you see the way we do it. Do you understand? We share what we do, we share what we see, and you see the way we do it. You learn from there. It's expensive these days for you to find a mentor trader. Expensive. So to cut your journey of learning short, you would need a mentor, someone who is successful. You will find a working strategy. Anyhow. And that is why we are here to help you as well. Find a strategy, study a concept. You don't understand the concept, ask questions, and we'll help you find ways around it. As Kazim rightly asked, and Samuel rightly asked, how do you know a strategy that will work for you? Well, all strategy works if you do what you have to do. If you do what you are being told to do, if you follow what you're being asked to follow, as long as that person who is showing you that strategy is profitable and is telling you to do this, do it. Do it. Later on, you get to understand deep. Do you understand? So another thing is, don't leave the charts. Always look at the charts. Spend 1-2 hours every day on the chart. 1-2 hours every day on the charts. Take trading opportunities and they've been dropping the trading signals. Why is this person saying this thing will buy? Why is it? That is the reason why, if you see my analysis most time, I drop analysis with
All right, thank you, sir.
you're very welcome. I drop analysis with details on them. On the H4, this is what I'm seeing. On the 1 hour, this is what I'm seeing. So that even as a newbie, when you look at it, you get to follow the pattern. I put in arrows to indicate the direction I feel the market should go to. Do you understand? When studying the chart, I get confused. Now, the reason why you get confused when studying the chart is because you have not really outlined what you want to do. You've not really outlined what you want to do. Now, how do you analyze your analysis, your trend? How do you analyze your trend direction? These things move step by step. If the first thing is trend, what strategy are you using for your trend? Do you understand? What strategy are you using for your trends? If you're doing a support and resistance, what strategy or what's your system of strategy and support and resistance? What are you doing? What system are you using for your entry? Are you entering from the 1 minute, from the 5 minutes? What are the criteria that must come into play before you enter? Do you have a system around it? What are your system for exit? Do you have a system for exit? When the market goes against you, what's your plan? If it goes in your direction, What's your plan? Do you have systems for this? So when you're looking at that chart, now there are different ways of analyzing a chart. You can look at the chart from the view of candlesticks, just single candlesticks. You can look at it from the view of a holistic chart patterns, which comprises of various candlesticks making up pattern. That's why I said you need to define a strategy. Like you need to get your strategy right. What is it? Now, let me give you a shortcut to this. I gave you elements of strategy development. Kindly work on those elements. If I say I should begin to teach strategy now, I have a strategy and I want to teach that strategy. We're still going to hold another class for like 1 month, extra 1 month again. Do you understand? And that's maybe that will be conveyed later, but we'll get to resolve if that will be done for us. That will be done later because I believe my boss is hearing this now. So I don't know how we can get that done. But anyways, the message will be passed across if it's possible. So according to Omoyeni Richard, when studying the charts, so you get confused. So I just give you a breakdown. Work with the charts bit by bit. Do not say you want to become profitable overnight. Take that part of money. Take that part where you are so eager to make money in the market. Take it out from your mindset first and concentrate on the process. Focus on the process. Okay, Adebayo, I'll call on you soon. Concentrate on the process. There are processes to this thing. Start with the element of strategy. Start with trend direction. Go on to support resistance. In your different strategies, you might come across. Like I already told you what support and resistance. It works. See, it is the same thing in all strategy. They are just giving them different names. They're just giving them different names. And your strategy is your edge. That is what gives you the edge to trade the market. It gives you that edge to trade the market. Do you understand? I hope I answered that question, Richard. Richard, I hope I've answered you. Okay, good. Divine, I'm not finished. I'm coming to your question though. Adebayo, you have a question for me? You can talk. I'll unmute you.
Good evening, sir.
Good evening, sir. How are
Yes,
we
sir. Well
today?
done, sir.
Thank you
you,
very
sir.
much. All
Really
right.
appreciate the support. Thank you very much.
You're
Yes, my
welcome.
questions are now. Now, if I want to, when doing my top-down analysis,
Okay.
now the time frames to be used,
Okay.
can I use only two? Can I use 2 time frames?
You can
For
possibly
example,
use, yes, I understand where you're going to. You can use 2 time frames. Let's
okay,
ask,
if I want to,
what type of trader are you?
I'm a beginner, but I'm a scalper. I scalp.
Okay. So
Yes.
for scalping, if you want to use
Yes.
2 time frames, you can use the 1 hour and the 15 minutes.
1 hour and 15 minutes.
The
Okay.
1
1 hour.
hour should be your trend.
Okay.
Then the 15 minutes can be your support and resistance and your entry time frame.
Okay, sir. Okay, sir. Thank you. But I learned that, yeah, somebody said that 5 minutes, I can place my entry on 5 minutes and use 4 hours.
You can use 4 hours as your trend time frame. Now, this is it. Let me break this down for you.
Okay.
From the monthly, the weekly, the daily, and the 4 hours time frame are called the higher time frame.
Okay.
On these higher time frames, that is where we find direction.
Okay, sir.
Do you understand? So if let's say you're using the 4 hour time frame as your directional time frame, and the market is on the 4 hours, it's buying, like it's bullish on the 4 hours. It's telling you uptrend on the 4 hours. You can go to the 15 minutes, 30 minutes, 5 minutes, 1 minute and trade. All you'll be looking for and scalp, all you'll be looking for is that same bullish move you're seeing on the 4 hours. You're waiting for that same bullish move on the smaller time frames. If it happens like that, then you take, since you're scalping, you're just looking for 10, 20, 30 pips and you're out of the market. You're not staying there the whole day.
Yes, sir.
Do you understand?
Yes, sir.
Good. So now
Yes,
you've
sir.
divided it into 2 time frames. You can do H for 15 minutes.
Yes.
You can do H for 5 minutes. Do you understand now? You can do daily 1 hour.
Okay, sir. Okay, sir. Okay, sir. Thank you very much. I'm very grateful. Yes,
You're
sir.
very
Another
welcome.
question is this. As a
Okay.
scalper, if I'm scalping,
Okay.
is it, can I, instead of, no, at times, I take like a 3, 4 instruments and scalp each of them. Now, is it better to stick to one? Maybe I pick one instrument and I scalp, then I
Okay,
relax.
now, let me ask you one. I want to ask you one question.
Yes.
When you scalp 4 different instruments,
Yes.
what kind of instrument? What are their speeds? When I mean speed now, their peak value. Let's take pound USD for example.
Okay.
You know, pound USD has its volatility is high.
Okay.
Compared to Euro USD.
Okay.
You can scalp pound US, any pound pair. Let me put it this way: pound pair, any pound pair, pound JPY, pound USD. So it depends on the targets. What pips? How many pips are you targeting as a scalper? Do you have it? That is what we talked about trading plan. Okay, you want to scalp pound USD. How many pips are you looking at scalping pound USD? Are you looking at 10 pips?
Okay.
If 10 pips per scalp is what you're looking out for. Mind you, when you're scalping pound USD, maybe you have another pair by the side. Maybe euro pound. Pound USD is buying, euro pound is selling. You're scalping pound USD, and you already checked your trend on euro pound to see that it is selling. But right now you are busy with pound USD. When you head over to euro pound, do you think you'll be focused enough to know that euro pound is selling?
No.
No, you won't. Do you understand what I'm saying now? You think your concentration will be so high to focus on euro pound to know that it is selling?
Yes, it won't be total. It won't
It
be
will be
total.
total.
Because I'll
Yes.
be, yes.
It will be total because after you scalp pound USD, your mind, you're already in that rush mindset to go to euro pound to sell. And you might, at the end of the day, get blind to know that this thing is retracing. Oh, this is no longer selling. It is retracing. I need to stop. You just want to enter because you feel your brain has recorded sell already. Do you understand? So my advice now is this: one pair can give you whatever you're looking for.
Okay.
As a beginner, stick to one pair.
Okay.
Stick to one pair.
Okay.
Master that pair very well. Do you understand?
Okay, sir. Yes, sir. Thank you very much, sir.
You're very welcome.
Thank
And
you, sir.
Richard said, I have another question. My demo account is quite different from my real account. Like example, sir, my demo USDJPY.S, which is an STP account, and my real account ends with USDJPY.C, and there is no major currencies and minor currency in my live account. Okay. Richard, there are major currencies there, but you don't identify them. On your live account, your real account that ends with a USDJPY.C, there is something you will find when you go to add currencies. You would see major Forex .C as a folder. You would see minor Forex.C as a folder. Click on it. That is where your currency pairs are. Click inside it. Now, if you find a folder that is saying major Forex, do not click on those folders. That one no concern you. Do you understand? It doesn't concern you at all. So I hope I've answered that side for you. Now, let me go back to Divine's question. Divine said, Ame, I don't know how to go about this, your question. No. But let me see if I have my, okay, good. Send it to the group, Ayani. We'll look into that one. You said you have, where is it? Okay, can you share a sample of your trading plan? All right, let me quickly search for it. I should have shown it, but please, you guys, wow, you guys should hold on. My button, this button. You guys should hold on for me, please. I don't know what's wrong with my screen now. Okay. Go, go, go. Where are you? I already have it in my head, so I don't really look at it that much anymore. Oh. Okay, this is what we'll do. I'll share it with the group. I'll share it in the trading group so we can all see the way a trading plan is. That's for me. I'll share it in the group because I can start looking for it now. I've made use of it for so it's a long time since I've looked into it. I don't even know why I kept it on the system. Well, I'll share it later on. I'll share it to the group. Divine, your question. Let me see that question again. That question says, where is it? The question says, okay, Ione says I don't have a strategy. Ione, I shared something. Well, let's talk on the group. You ask me questions on the group. We'll find a strategy that works. Can you explain the concept of liquidity? Yes, liquidity in the market. Now, Divine, is it liquidity in terms of strategy? Is it liquidity in terms of strategy? Can you hear me, Divine? Liquidity in terms of strategy. Is Divine there? Okay. General liquidity. Okay, that is when too much money. Liquidity means money. That's the basic thing. Liquidity means money. Liquidity means money. Can chart patterns be trusted without other tools? No, for me, I would always advise that you use other things. We call them confluence. Let there be confluence between two things. Your chart pattern and maybe support. And that is why we always believe that. I always say, let your chart patterns form at support and resistance areas. Let it form at support and resistance areas of the higher time frames. Let's say you are trading pound USD. The H4. The H4 time frame is your trend time frame. Now on the H4, you mark out your support and resistance, or you mark out, okay, let's say H4 is your trend time frame, the H1 is your trading time frame. You mark out support and resistance on the 1 hour time frame. You can go over to the 15 minutes and sort out a trading chart, a chart pattern on your support and resistance level. Now that's a confluence. A trade pattern, a chart pattern in the direction you want to trade with a support or resistance level in that direction you want to trade. That's confluence. That's two things coming together to give you idea. At times, a chart pattern might form around a Fibonacci level. That's confluence. Moving average with chart patterns we form together, then we meet at the point. That's conference. So I always advise for you to use conference. Why? Because it gives you this double check on a high probability mark that trade should work in your favor. And the trade should work in your favor. What other thing? Now, someone said, how do you backtest? Now, backtesting can be done. There are various tools for backtesting. There's one software we call Forex. Can be used for backtesting, but it's not free. It's paid version. We have, you can use TradingView. You can subscribe to TradingView Premium to give you the ability to backtest. And you can also use you can also use your MT4. All you do is just go back to time past and look at how the market has behaved. But meanwhile you're doing that, you need to be marking with your, what do they call it? Your strategy. If you're using support and resistance, you need to see what price has done in the past and begin to identify them, study them, write them out, and keep doing them. So while you see what it has done and you've seen what has worked, you can now forward test. And forward test is a way of saying, let me test what I have seen in live markets. And you work on it to see what you have done. If it's in the right group, you understand. If it doesn't work, you will be able to find what made it not work. Do you understand? So I guess I've answered your questions, except for Ame, which I said I was going to share my trading plan and the group. Or I can, don't worry, I'll share. Yeah, that's that trading plan. It's a one-page trading plan, but if you look at it, you might get confused. Now, any other question? Any other question? I think we're all good here. Emmanuel, no question. What a surprise. Emo has no question. Okay. Adebayo, go ahead.
Thank you, sir.
Right.
I just want to ask about the liquidity of the thing.
Okay.
Can it be applied to both, to any form of trading markets, be it uptrend or downtrend?
Now, liquidity, that's why I asked the question the other time when, what's his name? Divine said general liquidity. You see liquidity of two types. Now, the question you're asking liquidity, you're asking about liquidity now. Which of the liquidities are you talking about? Is it the general liquidity of the market where money is being involved, where money is being injected into the market? Or the liquidity as a strategy?
As a strategy.
Okay, now you're talking about ICT.
Yes.
Or SMC.
Yes.
Okay. Now liquidity can be employed. Liquidity can be employed in the market. Let me show you something. Let me show you something.
Okay.
Sorry, guys. So sorry. I never knew Sorry. Okay, can you hear me now? Can you hear me now? Okay, good, good, good. Now, for the part of liquidity that I was saying, this is Euro USD trade. And by my analysis, it was a very tricky trade anyways. This was my trend. I was looking at it like this. This is what I'm expecting the market to do. If you look at it from the 1 week, weekly time frame, this is what I'm expecting the market to do. Now, the market from this point, from this high to this low, will not drop at once. As you can see, it came down, gave this low, went back, came down here, gave this high. Now I'm expecting it to come down, at least to come give us a profit here. This was my first TP. Then this is my second TP if it will drop to this point. But I want to be sure of this point on the higher time frame. Now, before I took that trade, what was I looking at? I was looking at this. I already saw this, and I saw this. I saw this. There was a big break here. That was how I was talking about market structure. That you need to really, you see, market structure is one defining thing. If you can identify the direction of the market, I think by strategy, you are already 50% good. Because even when your entry does not work, the direction of the market will push your entry. So I already saw this break, and I knew this is a break of market structure. So within here, I know the market will reverse anytime soon. But to what level, I don't know. So when I saw this move, some people now, some traders will take this. You see this little move that happened here, this one. This one you're saying, oh, what's wrong with this thing? This one that happened here. This one that happened here. Some people would have been selling already, not seeing this move. That is the way I was taught market structure in those days that wasn't giving me what I wanted. This is the major move here. Took out this. Now I'm expecting. So all these things that is happening inside here are noise. We call them short-term structures. So what the market did, this is liquidity. At every level of swing high, every high point, all here is liquidity. All here is liquidity. Even the small ones you're looking at, this swing point here is liquidity. This swing point here is liquidity. That's why you see what the market did here. When it was going up, it was dropping those liquidity points. It came down. Now, at this point here, let me clean this. At this point here, it took out this liquidity. So you see, some people will call it a break of structure. It is not a break of structure. It is liquidity grabbing. That's taking. Some people have their stop loss here. Some people who thought the market will buy. Why? Why would some people have their stop loss there? Look at it. The market came down, went up, came down, went up, and it came down, went back up. So some people would have bought here, thinking the market would be going up. But they came down, took out that liquidity before finally going up to grab the liquidity that was here. And we waited for a break of structure, which was this structure, before we saw a retest into. For Adebayo that was asking, I think you know SMC, so you should understand my terms. Fall into this fair value gap. It is from this fair value gap that we have a clear path to say we are going down now. So I hope I've answered your question, Adebayo. Liquidity are just short-term highs and lows in the market, short-time swing points. Short-time swing points. Swing points in the market. Do you understand? Like here now, at every point of highs and lows, there is liquidity here. Anywhere, any turning point is a liquidity. Here is liquidity. Here, any turning point you are seeing, either high, low, all these ones, they are all liquidities. So the market can decide to grab anyone before it drops. Now, I'll show you something that happened here. I think it's still on this Euro USD. That didn't make me take the trade in the first place. I even entered the trade late because I was expecting something and it didn't happen. It was a form of liquidity, I think on the 1 hour. I didn't take it here. I was expecting, yes, obviously I was expecting a turn around here. This was where I was expecting. I was supposed to enter from this point here because this was what I was expecting. If you go to the daily, you would see it. You can see it here. Can you see my mouse?
Yes.
I was expecting the market to turn around here for me to start selling. So when I went to the 1 hour, it didn't give me the direction I wanted, like the kind of things I wanted. So I was doubtful. I did enter it and it kept dropping. I think this is where I entered. It dropped to this point and I felt this move can't go like that. I need to take something out of here. Now, I was supposed to enter around here. But you see, at this level, that part of psychology that I was telling you guys, like if you don't have a trading plan, I didn't make use of my trading plan here. If you don't have a trading plan, you'll be looking at things and things will be passing you by. So you're supposed to plan every day on how you want to attack this market. So at this point, I was supposed to enter. It was later when I was doing my review and I found out that this was where I was supposed to re-enter after missing this thing. I was supposed to enter the market around here and have my stop loss somewhere here. Now, the reason why I didn't enter the market around here, let me bring out this for you to see something. Why I didn't enter the market there was because if I understand fair value gap, do you understand fair value gap?
To some extent.
Okay. Now, this is a fair value gap. The space between these three candles is a fair value gap. See that space here?
Okay.
That's a fair value gap. So I was expecting the market to come to that place before we sell. So this was my pre-planned area already. That once it comes down here, my stop loss will be here and I will sell. So when the market didn't come to that area, I thought the news will push it inside because this is a news candle, the CPI news. So I thought the CPI news will push it inside, then I'll sell. The news didn't push it inside. So it was making me skeptical to join. You understand? And that was because I have a trading plan. If I was just trading anyhow, I would have entered and maybe the market would have come here, taking me out. I don't know. You understand what we're doing now?
Yes. Okay.
So that's it. You can use, what is it called? You can use liquidity for any strategy. Yeah, you can use liquidity for any strategy. There's nothing bad there. You can use liquidity for any strategy. So,
okay.
very welcome. Any other question? Any other question? This is past 10. Okay, so I believe in the absence of none, we would like to call this a day. We're calling this a day. I hope tomorrow, what's tomorrow? Tomorrow is Saturday. Okay, tomorrow we'll be doing more on practicals. We'll do more on practicals. We'll work. Okay, let's do something tomorrow. Let's analyze the pair tomorrow. We'll do pair trading analysis. So I'll use those elements. You know that I'll be using my own strategy, which is another funny thing. So we'll work on that and we'll see how it goes. Then possibly, I don't know, like I said, I was going to discuss that with my boss. If it's possible for us to have, I can give out the trading strategy you guys can learn. We'll see how possible that can, but it's just that something with trading strategy, it has to work with you as a person. You will need to really, really go inside it as a person. If not, it's going to be a bit difficult. Do you understand? But whichever way, we'll find a way around it and see what we can do. Yes, 8 p.m. our time, 8 p.m. same time tomorrow. 8 p.m. the same time tomorrow. Do you understand? So whichever way it is, God will help us. I want to say a wonderful good night to all of us and thank you all for joining me. Those who were asking for the recordings, previous recordings, it has been posted on YouTube and I guess you've seen them. The link has been shared. You're very welcome, Divine. The links have been shared so you can possibly look at them. And please you work on this if you really want to succeed in trading. It is very, very important. You need to really work in everything you do. You need to really work hard. So, but trading takes an exceptional skill as well. It takes your time. You need to put in that time and effort. On the long run, it's a huge gain for everyone. It's a very big gain if you stay patient enough to master and understand how it works. It's a big gain. Even as I'm talking to you right now, I am still learning. I devote time to learning every day. Like I devote time. I practically don't have anything I do, and I just look at trading materials, study the charts. So if at this level I can still be doing it, so how much more you guys just starting out? You understand? So I encourage all of us to put in energy. Please, let's not just say because people are doing it and making money, I want to. We have different reasons for doing it, and then that reason motivates you to put more efforts. Thank you so very much. May God bless you all. And I need you guys to sleep tight. We'll meet up tomorrow. Same time tomorrow. You're very welcome. Tommy.